Hi everyone, this is Christian from AgoraOpus, and this is the first video we're doing on something we call PACO charts. So yesterday we released the first PACO chart. So basically go to our webpage, portfolio.construction, and you'll find PACO charts, this first one. And what that is, it's up to 20. This time we released 18 charts that we pick from the 50 biggest companies based on market cap. And then we show you the price for last 5 years, including the AgoraOpus Rank Oscillator indicated on here. So we do that for up to 20 companies, and we also attach a little text description describing what's happening with the forward-looking estimate, which is the blue line here. So I'm going to spend this first video to sort of like spend a bit more time explaining what this indicator is all about, so that it's easy for you to follow on, and then we'll look at a few examples. So let me start by just opening Apple up here into full screen, and then we can start having a look at that. So basically, the Aoi Rank Oscillator is an indicator which tries to rank companies based on the expected performance of these companies relative to all the other companies that we include in the analysis. So a high-ranking company basically means that we expect this company to perform better than a lower-ranking company. And for example, looking at Apple here, right? We started ranking Apple better from a low point here in January 2017. Quickly started ranking this better and better up to a point where it passed 80, and then sort of stayed between 80 and 100. And that's a very good rank level. It's difficult for any company to be ranked higher than 100. It is possible for a few, but in general, that's not possible. And it's also on the lower end, it's difficult for companies to be below 0, even though a few companies will be below 0. But in general, the companies are ranked between 0 and 100. So it's a bounded range, and it being ranked above 80, that means it's in the top 20, assuming 100 being the top value, rank value. So, okay, so we started ranking Apple better, and we started ranking it above 80 in around May 2017. And as you can see as well, the price has been steadily been going up, right? So does it mean that a higher rank means the price automatically goes higher up? No, not necessarily, because as I said, it's a relative rank. So let's say instead of this being a bull market, let's say it's a bear market, so things are going down, right? If that's the case, we would then be ranking companies we expect to go down the less, to lose less in value compared to all the others that are going down higher, right, than the other companies that are going down more. So again, it's a relative performance measure where we expect higher ranking companies to perform better than lower ranking companies. All right, enough about that. Looking at Apple, we started ranking it better in January 2017, and indeed it's been high ranking since. The overall trend of the indicator has been down, but it's still been ranking high, even though it's been sort of been trending down a bit over time. From it reached 100, and that's not unexpected, right? If it can't go much above 100, then the only way is down, right? And that's indeed what's been happening on the rank value. Though I mean, Apple as a company has still been ranked very high, been above 80. So it's been a good rank level for Apple for a long time, since like May 2017 onwards. And indeed, the company has performed very well. Indeed, with the price going from 100 up to past 200. Then there's this blue line here, which is a forward-looking estimate. So that's us trying to predict what the rank value of Apple will look like into the future. And what we're seeing is that it will remain sort of around the same level for a little while, heading down a bit before heading down a lot more, down to all the way down to 40, before heading back up again. So for me, that means I'm not that interested in buying Apple currently, because what I'm looking at when I decide how to pick companies for my portfolio is that I look at things that are ranking high or are on a path to rank high. So I like rank indicators that are heading up, staying strong, right? So that's what I'm looking for. And because this is sort of heading down, I'm not currently interested in having Apple in my portfolio. All right, moving on. Let's look at some other examples. See if we can find. Interesting. Okay, got Salesforce here, a CRM. So CRM, another similar-ish type of story. Started ranking better in January 2017. Price has been going up very strongly, almost like exponential to some extent, a little bit, right? Increasing quicker and quicker. And we've been ranking it very high, right? Above 100 often. And as you can tell, when it goes above 100, the indicator line turns from green to white. Just give a quick intro on the colors there. Below 50, so it's in the bottom half, it's red. Above 50, so it's in the top half, it's green. And then it goes above 100, and that means it might be growing too quickly, right? So it's performing so much better than the other companies we're looking at that we're starting to have doubts. Like we're sort of starting to think, are investors having unreasonable expectations about the future growth of this company? And we're sort of putting on the alarm. The warning sign is starting to blink, and we're turning this into a white color. Doesn't necessarily mean that it's going to go down straight away. It just means that you should be prepared for maybe something happening that is going to put some negative surprises in, and you should be prepared to deal with that. So tighten your take profits or you tighten your stop losses, whatever, to prepare yourself for something to potentially happen. And that's what we saw up here as well, right? So in when was this? Late September. We've been telling you for a while that this is very hot, this is very high ranking, and indeed things did drop, right? And then it went back up, of course. So it's tough to time these things, but at least you got a warning that something could happen, and it did go back down to green when it came down here, which means high ranking, not too high ranking. So yeah, it's maybe an opportunity to get back in. And now it's currently ranking very high again. And looking at the forward-looking estimate, it's sort of trending down. I would be careful. I don't think it's the right entry point currently, but it's certainly very strong. So it's worth keeping an eye on. But tactically speaking, I think it's risky to go in here now. That's for sure. Okay, let's find another example. Intel is interesting because it's been so strongly ranked for such a long time, right? So again, January 2017, a lot of things started going up very quickly, and we've been ranking Intel at a very high level, about 80, but not too high, so like 95, but not past 100, between 80 and 90 roughly most of the time, for a very, very long time, but nothing really happened with the price of Intel for a long time, right? So even though we're ranking it high for like since May 2017, nothing really happened with the price till a few months later, and then the price started going up. And okay, even though the price went a bit down and it's now back up again, we're still ranking it high, ranking it flat to up, which is interesting, right? I think tactically speaking, again, we had a top here. Is this another top? So is it going to go down a bit? Maybe that could happen, right? In which case, this could be a good buy opportunity if this rank remains high at that point. So yeah, worth keeping an eye on. I'm not currently looking to include this in my portfolio, but I'm keeping an eye on it. Let's look at Netflix. Yeah, let's look at Netflix. Similar story to like Salesforce. Really started ranking higher January 2017, but maybe also a little bit before that, even though it went down a bit. And it's been ranking high, very high, for a long time, since like May 2017. Price certainly been going up and then crashing down a bit, which we've been warning about here, right? Indicator's been white, been indicating that it's very hot and things might happen, and things did indeed happen, but it sort of went back up again. Okay, so we had a good recovery. We're still ranking it high. It's currently below 100, so that's good, right? But the trend or the future, the forward-looking estimate is trending down, short to medium term, and then heading up potentially after that. So for me, this is another one where I'm holding out. I'm keeping an eye on it. I think there's better buying opportunities later. So yeah, I'm keeping an eye on it, but I'm waiting. It's too early, I think. So what else do we have here? I wanted to show you this one. So this is Visa, and very much similar to a few of the others we've been looking at. Started ranking better in January 2017. Very quickly went up to 80, 90, and then even a bit above 100. Price has been in a strong, straight trend upwards. Very good. But then what happens here, right? The rank starts heading down, right? And even though it's strong, it's still above 80, right? It starts heading down all the way down to almost 60. Even though the rank is heading down, the price is not heading down. Okay, a little bit of volatility here, maybe, right? So you could argue that you had a top here and a bottom there, and indicated that with the downtrend in the indicator here. But I think instead what you should be thinking when you see this is that, okay, so if you entered Visa down here when we started ranking it better, you don't want to jump out of this trend, right? But you don't necessarily want to just focus on this heading down. What you rather want to focus on is that since it's a relative indicator, this going down means that it's going up for some other company. So what you want to focus on when this happens, right, is that you want to start looking at other opportunities. There might be other opportunities that are starting to rank better and are therefore maybe being capable of performing even better than what Visa is. But yeah, that's the sort of thinking you should keep in mind when this starts happening, and that's sort of what we're starting to see happening here, right? Currently, yes, it's ranked very strongly. It has been heading up for a long time. Prices at all-time high in this view, and the rank is heading up a little bit more, which might mean price is heading up a little bit more, but then it's trending down again. So for me, that's an indication that maybe it's time to rather focus on other investment opportunities and enjoy the profit you got from Visa. Okay, that is all I wanted to show you, but I want to finish on this final one here, which is showing the one of the portfolios that we make, and we call this portfolio the next 10. And basically what that means is that we here take not the top 10, when you take all the companies in ranking order. So if you take the highest ranking company first, and you exclude that and the next 9, so you exclude the top 10. What you do is you include the next 10, right? And the reason for doing that is because if a company is ranking at the top, it's very difficult to get much higher, right? It's sort of at its peak, and we're assuming that the downside risk is increasing more than the upside potential. So that's why we're excluding the top 10, and then instead we include the next 10, because the next 10 are showing high rank, really good rank, and it's still got some upside ranking potential, right? So that's what this portfolio is showing. It's showing taking the next 10, updating it every week. It doesn't mean there's 10 new companies every week. It means that maybe 1 goes out, a new one comes in, or 2 goes out, 2 new comes in. Typically, that's how it works, and it shows you what the performance of holding these 10 equally weighted would be, and that's compared against the benchmark portfolio, which is the one down here. And the benchmark portfolio contains all the assets we're including in our analysis. So that's basically the market overall. And what you can see, right, is the next 10 portfolio has been performing better than the benchmark. And you can see here on the relative difference between them that it's like almost like a straight line. And even though things go down sometimes, right, because we're holding long-only positions there, it tends to go down less for the higher ranking companies than for the market overall. That's what we're seeing with this relative view trending up in a pretty straight line most of it. And if you look at some of the stats, right, so you got a beta close to 1, so it's not like we're taking on unnecessary exposure here. We are building a portfolio which is close to the market, but we're able to extract a good alpha, in this case around 16% on an average annual basis compared to the benchmark. So yeah, that's very interesting. That's our next 10 portfolio. That's just following some very simple mechanical rules. You don't have to do it like that. Like I've been showing you, you can look at the rank indicator trending up and staying high, which is what I do for my own portfolio. But like you see what will happen if you follow a very mechanical rule, and it's been performing very well. All right, guys, that's it for this video. I hope it's been useful. Leave me some comments, ask questions. Feedback is very helpful and very welcome. And, that will help me, improve on this, ask questions that I can answer and so on. If you want more of these charts, then I recommend you subscribe to the mailing list as well. Again, go to our site, which is portfolio.construction. I'll put the link in the description. So yeah, hit like, hit subscribe. And guys, remember, predicting the future is not easy. If you're investing in the market, you might lose money as well. So make sure that you understand what sort of risk you're taking on. And if you're not sure, then you should seek some advice. All right, keep it up.